We're going straight to the business of the day. I believe you can see my screen. Let me know if you can see my screen. Please do let me know if you can see my screen. All right. All right, all right, all right. Thank you. So, welcome once again to this market color session. Like we all know, today is for analysis on US 30, NAS 100, and also other pairs that we have, right? So we stated last week vividly that we've reached a zone where we're expecting a sell-off from US 30, right? We hit the minus 50.0 fib extension level, right? Our target was 0. After 0, the next target was minus 23.6. And after the minus 23.6 was, met, we said our next target will be minus 50, ignoring minus 38.20 level. And then what happened? Immediately price got there. Exactly. We saw it just to rest on that level, and then a sharp drop to the downside to this 0.0 fib level once again. So I believe market structure, it is a play of market structure. Price has created this long move. We're expecting a sell-off, and then we should start preparing to buy from this area, right? We start preparing to buy from this level, this entire area here, the normal support and resistance kind of trade. So this is what I'm expecting from this level. But when you look at more details on the chart, for one, on the daily time frame, you see other reference points. This fair value gap was like in a form of jump. This is one level I'm expecting price tap into, and then we start to move to the upside. Also, we have another level just beneath it here. This is another level. So it's like level on top of level. So I want to see price come into these zones, at least this first one, before we now start pushing to the upside, right? Before we start pushing to the upside, I want to see price, enter this zone. I want to see price enter this zone, and then from there we start looking for buy opportunities, because of course we wanted to buy from this level. However, I think it stopped me out the first time, so I had to just calm down and look at the daily time frame to see what exactly is going on, because that's the bigger picture. On getting to daily time frame, I saw this. I'm like, okay, it is good, it is all fine. All we have to do is just be patient, wait for this. This have like a breaker block. Although we didn't see this power push, assuming we saw a powerful candle like that closed above here, we will be certain that, all right, we want to see a form of retest, right? Not even retest, a continuation from this level, because it was a failed order block. However, notwithstanding, this other block was violated. However, price did not close above it. I mean, this candle here. So price did not close above this candle, closed beneath it. But one other confluence that we might also add to the buy bias is this gap that we saw, right? On the open of the next day, right? That's the next week. What did we see? We saw price open with a gap. So we expect that to be filled, right? And once it is being filled, then we start anticipating our up movement to the upside, right? So that's what we are seeing on daily time frame. On 12-hour time frame, is there anything? No, it's still the same analysis. It's still the same analysis that we are having, right? Still the same analysis. If for any reason price start moving up from the upside from this level, I'm looking at this place as a good place to sell off from, right? I'm seeing another sell opportunity from here. This kind of a breaker block type of sale. So once price comes to this level, we want to see I'm looking at something like this. Let me use my path tool to draw it out. If for any reason we don't get to see something like this, and then price continue to the upside, even this, we will see something like this, and then price will continue to the upside. If we don't see something like this, then I should expect an equivalent, something like this, that will eventually come to the downside, and then from there, we're going to push to the upside. From there, we're now going to what? Continue our push to the upside, right? I hope I don't confuse you. I hope it's not confusing, right? If for any reason price start buying from this place, then I expect to see a bounce off from this place. Price will test from this level, and then it's going to sell off to this, and then we'll now continue. We'll now begin our proper buy to the upside, which I believe is going to clear all of this previous high that we had, or the all-time high that we've formed so far. So this is what I'm looking on the large scale, right? The larger picture, this is what I'm looking at. I'm expecting this to happen on the chart. On the 4 hours time frame, what do we have? Nothing really. I believe strongly that if price should move here, enter this zone without touching any of this level, we should see a sell-off, a massive sell-off, right? We should see a massive sell-off from this place. We just see it turn to the downside and then start the original buy, right? So on the 2 hours time frame, really, there's just been consolidation. All of this movement has just been consolidation. Price hasn't done anything spectacular so far. All this movement has just been consolidation, right? So I want to see a break from this level. I want to see a break from this level, either to the upside or to the downside. So if it goes to the downside, then it's going to align with our overall analysis, which is we are bullish, and then we'll continue the movement to the upside. However, if we see, like we already mentioned, if we see any movement to the upside, then we should expect it to start selling off from this level aggressively, and then we just continue selling from here till this point, and then we take our profit here, enter a buy, look for our entry signature, enter a buy, and then continue to the upside. So that will be off on US 30. There's really nothing on intraday basis. There's really nothing happening so far with this kind of candlestick we're seeing. All we can do is just be patient and wait for for more price action to happen, right? We want to see other candlestick form. Probably by New York section, we're going to have enough data, additional data to, factor in all of the things happening. But for now, what we have is so limited. We can't make enough decision from it, right? So let's go to NAS 100. Let's look what NAS is doing on a daily time frame. NAS has sold off massively. NAS sold off. Very, very crazy, right? We had a setup here last week, and my usual concern about the whole setup happened. However, this was our structural low that is yet to be broken. Price got almost to this place. Our previous low that is yet to be broken, I mean to say, right? Our previous higher low. For those that don't understand, this is our previous higher low that price hasn't broken yet. So if for any reason price break through this level, then we just look for a reversal, a retracement, and then continue the movement to the downside. And where will it be going? We're going to clear all of this one too, all of this one, because you have enough fair value gap. Of course, this level is a very strong level. This entire level is also a very strong level. So if for any reason price break through this region here, then we are going down to this point. So let's just look quickly on the analysis we had last week. Okay. So it's based purely on structural liquidity and market structure. So we had price cleared through this previous structure point, right? We had price cleared through this previous structure point. And then this was our structural low. This was our structural low. This was our structural liquidity, our strong low, structural liquidity that we expect to be cleared, and then price should trigger us in from here. What did we see happen? Immediately, these guys started staggering, started stalling around this place. They went into a range here, and then from this point here, we started seeing the push to the upside. I was kind of a bit concerned because the usual thing you want to see with analysis like this is a sharp drop to that level without any distraction or any arranging markets in between, because we believe that the strength that price is going to use to violate this that's already happened here, right? And then we saw that push to the upside here. Assuming we saw this happen around here. If assuming this happened around here, then I would have been confident still in the buy. But immediately I started seeing all of this move happen, I know from experience that once I see it like this, most likely, the setup is going to be invalidated. Does it happen all the time? No, it doesn't happen all the time, but most of the time, right? When you see price move before getting to your area of interest, when you see something like this happen, and then start moving before getting to your area of interest, which is this zone, then you should be careful about that setup. Either you want to just close the order entirely, or you want to reduce your risks on that particular trade. I've seen this happen over and over again in the market. So I'm very, very careful when I don't see that sharp drop, that one-time sharp drop to my area. If I don't see that sharp drop to my area, I'm very, very, very careful. Something like this, yes. If I now see all of this drama happening around here, so I'm cool. And does that mean that it won't take me out? Nope. You can still do all of this drama here and then still take you out, right? But I'm saying a more probable trade in terms of quality, high quality trade, will be having all of this price action happening in this zone and then want to see it push to the upside. Of course, we saw a kind of a kind of reaction from this level. However, even though it happened, I think probably one is to something, 1:2 or so. Yeah, probably 1:2 or thereabout. 1:2 happen, but really, really, this is not what I'm looking forward to. My analysis was that we're going to, buy at least up to this guy here, right? At least that was my insight, that price is going to go all the way to this level. But we didn't see that happen. Instead, what did we see? Saw price violate our level, which is quite normal because of this that we've seen. Because of this that we've seen. So what am I looking for next? Have I changed my bias on NAS 100? Not at all. Not at all. I'm still very, very much bullish on NAS 100. If you look at the um higher time frame analysis, you will see that even the same thing is now happening. You now see that all of this is also this level that was cleared served as structural liquidity on higher time frame, right? Served as structural liquidity on higher time frame, making this guy a very strong low that wasn't violated. For those that don't understand what I'm saying, let me draw the markup. This is the strong low, and this is what? The structural liquidity. This is structural liquidity. On H1, this was our strong low on H1. So sometimes you have to just, zoom out, see what our time frame is saying, and then from there you get an idea, a clear picture of, okay, what the entire market is doing. Because if we have checked this out, probably, there are two things involved. We'll have increased our stop loss, or we'll have just waited for this level to, price to come to this level, and then we engage the market from this level, right? So I believe this should hold. However, we are seeing a kind of retracement across board, across all indices pair. And I think, let me draw the fib for this. Mm, Let me use this level at last low. Excuse me. One sec. Let me use the recent low. Okay. I'll use this other one. Okay. Okay. Let's see how it goes. Let's see how it goes. We should get other data today in terms of candlestick. For price action, we're going to use it to determine exactly how to engage this market. For now, I'm still very, very much bullish. I'm still very, very much bullish on this entire market. That's US 30 and NAS 100. However, for now, we are seeing a retracement. If for any reason this level gets violated, like I said already, you start looking at price coming down to this level, right? Start looking at price coming down to this level. This is just basic support and resistance. So start looking for price forming a support at this level, and then we should continue to buy back. But I believe this should hold. It should hold very well. It should hold. Although we've been having a lot of sellers pressure. Look at all the red candles. For how many days? So Tuesday, Wednesday, Thursday, Friday. Strong selling pressure, right? We really had a red candle just yesterday, which was Monday. So this is what we're looking at for now on US 30 and also NAS 100. If we have any question, we can ask in the chat box. We can ask a question in the chat box. If we have any question whatsoever, we can ask them in the chat box. I believe US 30 and NAS 100 are still bullish. Very, very much bullish, guys. Very, very much bullish on the higher time frame. Just have to wait patiently before we engage, and then we'll continue the movement with them to the new or recent high that they created, right? We just continue the movements with them. And what the fundamental behind this sell-off was because of the profit taking that happened on stocks. Was it last week? Yes. So that was the reason for the sell-off for fundamental, right? From fundamental aspect, of course, fundamental and technical, they go hand in hand. So we already saw from technical that once price gets to that minus 50.0 pip extension level, we're going to see a form of retracement to the downside, which is what we are currently seeing. However, there will always be a reason why everything happens on the chart. All right, guys. I'm waiting for our questions. Do we have any question whatsoever before my colleague comes in for the second part of the analysis? For the second part of the analysis, do we have any question, any inquiry, any gray area you want us to touch? If you have any question, let's make them known in the chat box. Let's make them known in the chat box. Let's make them known in the chat box. Okay, Mr. Femi is saying hello. I don't understand. Do you want to start typing the question? I greet you too. All right, in the absence of no question, without wasting much of our time, my colleague will be coming up shortly. Okay. Okay, Mr. Femi say, why? My question is, why do you use 2 hours for analysis? Yes, it's just personal preference. And then they give me higher time frame, give me, if you even look here very well, you see 12 hours, you see 8 hours. They give me clear perspective. The other things do time frame help me to do, right? In terms of I want to see what the 2 hours candle is doing, right? Instead of 1 hour, just to consolidate the data together. The personal preference, nothing really say special per se, right? For at least for this particular part of the analysis, right? Other reasons why I use 8 hours and other reasons why I use 8 hours and 12 hours are for probably FX bootcamp students. But for the 2 hours, it's just personal reasons, right? 2 hours and 4 hours, it's just for personal reasons, just for me to consolidate the data together and see if there's anything different. Sometimes on 1 hour, the other block might not be very clear. By the time you put the charts on 2 hours, you're going to see it clearly, right? And then from there you can engage. Or sometimes that you're seeing two other blocks, 1 hour and two other blocks on 1 hour time frame. Just say levels on levels, one beneath and one above. And by the time you switch it to 2 hour time frame, you see that it's just one single other block, right? So to help manage all of those complexities, I just switch it to 2 hours. Is there anything different? If I see that there's something different that the chart is saying, then I can now engage the market. Not like there's something really mystical about it. All right, all right, all right. Okay, because of our ATM cash flow training that's coming up today, will not be able to take the second part of the analysis. My colleague is currently preparing for the ATM cash flow. However, I'll be receiving commentary from our boss. Ensure you are available for the ATM cash flow. I said today, sorry, it's happening tomorrow. That's the 24th to 26th, right? Apologies for that mistake. It's happening tomorrow. Ensure you are available for the ATM cash flow training, right? Registration ends today by 12 p.m. By 12 p.m. Registration ends today, meaning if you're not able to book your slots today before 11:59, you're going to most likely wait for the next edition of the training. All right, all right. So that being said, let's welcome our boss for his commentary on today's analysis on today's markets. Good morning, sir.
Good morning, Demola. Good morning, everyone. Good to be here. Sorry, I wasn't able to be here yesterday. So great analysis so far. Generally, we have seen in the US markets, the equities markets, as we prepare for the election, as we see the drama that has been going on, assassination attempts on Donald Trump, the stepping down of Joe Biden, all of this has given a level of uncertainty in the markets. And so that's why you may have noticed that we may have not seen very clear direction or very clear moves. And the closer we get to the elections in the US, the more this will affect the global equities markets, the more it will affect the global equities markets, especially NASDAQ 100, S&P 500. But once there is a clear-cut election outcome, a smooth election outcome, then we will now see significant volumes coming into the markets, equity indices markets. So whatever we see between now and that time just gives room for short-term scalping. You know, stocks are largely a long-term thing. People that buy stocks are not like traders that want to be going in and out every day. It's day traders that they trade these equity indices. But really, the real big cash, smart money whales in the equities markets do long-term positions, minimum 3 months, minimum 1 quarter. All right, so they are waiting for that clarity from the election outcome before they can now begin to commit huge funds. So I'm just saying this so we can understand why there may be some level of lack of correlation, why there may be some levels of short-term moves, short-term indecision in the markets. That being said, it's clear now that the yen is fully in demand mode. If we look at the yen basket, please let's see the yen basket. If we look at the yen basket, we can clearly see that right now the yen is the preferred currency pair. It has been, yes, okay, yes. It has been so low for such a long time that it has become very cheap compared to other assets. And now we are finally seeing that there is a strong demand for the yen. Based on this, we will likely see yen pairs start to fall. Can you juxtapose DXY on this? Can you compare it with DXY? The addition button. Yes, thank you. Yes, you were there. Thank you. Okay, so I don't know if you can see what I'm seeing. Can you see what I'm seeing? Can anyone see what I'm seeing? If you zoom it in a bit, you can see that whilst the yen basket bottomed at around July, August, it is looking like the US dollar index also found its top about 2-3 weeks ago. That top there, exactly. That's it right there, exactly. So it found its top. The dollar, move your mouse up to the DXY so some people know what we're talking about. The line is on the DXY, but some people may not know. Move your cursor to the yellow line. Exactly, fantastic. So that was where the DXY seemed to have found its highest high. And then, of course, it took some time, but a few weeks later, the yen basket too now seemed to have found some sort of support and is now pointing upward. So just comparing this, right, explains to us why USD, let's see USD JPY. You can now compare USD JPY. Why USD JPY is in some sort of free fall, okay? So you can see, okay, no, not changing to US. Okay, well, yeah, this is also fine. I wanted to actually just compare USD JPY in the middle of yen basket and dollar index, so we could see why it has been collapsing. So you can change that back to yen basket, then add another compare symbol. So we're going to have yen basket as the main currency, DXY as the, and then USD JPY, fantastic, exactly, as another comparison, fantastic. So you see USD JPY as the blue line above, right? So the dollar index found its own high on the 26th of June. USD JPY did not find its own high until the 10th of July. So can you see, this alone is a pure explanation of sentiment. And this is how the bigger boys determine sentiment. For those of you who may be seeing this for the first time, this is how the bigger boys determine sentiment. So we now see what is going on and why the yen USD JPY is collapsing. All the yen pairs are collapsing. So if we see price break through that, of course, you know where price is going. Price is going for that high, that most recent high in the month of June. Right there, exactly. That's where price is going. When price taps into that, is there any fair value gap? That's the high that price is going into, yes. Is there any fair value gap? Shoulder, sweep, break of structure? Because that high now acts as some sort of inducement. There's a fair value gap ahead. Exactly. Exactly. There's a fair value gap there. Thank you very much. You can extend it all the way. Fantastic. All right. Now, what is this telling us? Where is our shoulder? Anything that looks like a shoulder to the left, some sort of shoulder. No, I'm saying the shoulder that produced that fair value gap. Exactly, that's a shoulder there. You can draw a line there. That's a shoulder that was taken out. Then after that shoulder was taken out, that's a sweep with a break of structure to the down. Sorry, that's a sweep with a fair value gap to the downside. Then where is our inducement? Possible inducement. That's the first inducement there. Yes. Where is the second inducement? That's the second inducement that you've drawn the line on already. Exactly. So we may see price tap into that fair value gap, clear that liquidity, And then when it gets to that fair value gap that you have drawn, of course, what are we going to be doing? We are going to be observing. What are you going to be observing? You're going to be observing DXY and seeing whether that will be the place where USD JPY will resume its move to the upside. So this is just an explanation of what has been going on so far. In fact, the way this chart is, this is a I don't want to be using big words, but this is a juxtaposition of sentiment and structure. You can see sentiment clearly, and you can see the structure and the liquidity concepts clearly. So that's where the yen basket is going. That means we'll still have more downside on the yen pairs. We'll still have more downside on the yen pairs because of where they are trying to get to. Because of where they are trying to get to. All right. So based on that, that is the explanation of what's happening on the yen pairs. That's why they're all going down, 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 down. All their correlated assets are going up, 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 up. And that's what we have seen there on the yen pairs. Now, with regard to gold, do you have any question based on what I've said so far? So based on this, any pullback you see on USD JPY, on the yen pairs, any pullback you see where price is going high, any reversal you see on USD JPY where price rallies, where price buys, just mark. Okay, so let's change this now to USD JPY. We can mark all the levels where we can re-enter ourselves. Let's change this now to USD JPY. I just showed you guys how to do sentiment calculations for USD JPY. For those of you who want to stick to just one currency pair, is a very good way of sticking. Good morning, sir. I'm getting so much knowledge on this. How much do I pay for you to teach me what I know? It's not about teaching you what I know, my brother. It's about teaching you what I know that is relevant to trading. There is a lot of irrelevant knowledge that is nice for analytics, but doesn't do anything. But if you want me to do a one-on-one with you, let's talk. We already know we already know the training packages that my team offers, and my team, they are very good. You see them showing up every day, right? But if you insist that it must be me one-on-one, if you're based in Abuja, then we can talk upwards of 1,000, 2,000 USD, and I can give you time and attention, and you can ask me whatever you wish to ask me. Perfect your training. So if we get it right, we get sentiment on the JBAS key. I like that, JBAS key. And then look for entries on the related pairs, sir. Yes, now that's what it's like. That's what we do every time. I mean, they were like, is it today that we're just discussing this? That's what we do every time. Whenever we want to get sentiment on the MPS, maybe because we have never put DXY and USD JPY on the same chart, but we have even done that. Yeah. So that's it now. So where are the places where we can start selling USD JPY? Very clear. Where are all the fair value gaps? Where are all the fair value gaps, and where are all the internal highs that can be grabbed as inducement? So let's see that. You can start looking for that on the, of course, there's the very big fair value gap here with an IOFED. So that's a big fair value gap there. That's one. There's a fair value gap there. There is also IFVG, inverted fair value gap. Where is the inverted fair value gap? The momentum moved to the top, exactly. That was now broken with another momentum move to the bottom. So this is confluence now. We're adding different confluences. Now, what again can I see? Remember I told you there are like 5 things you look at. Our box pattern, the shoulder and the sweep, right? Then I said there is also IFVG, which we are seeing there. IFVG can also be IOFED. This is actually an IOFED. It's not an IFVG. It's an IOFED because there are many candles in between the green candle and the red candle. The green fair value candle and the red fair value candle, there are many candles inside with 2 equal lows there. So this is an IOFED. not an IFVG, but the concept is the same. A fair value momentum candle that goes up with a fair value momentum candle that comes down to clear that move. All right. So Quantum T, you appreciate you reach out to the team soon. No, if you're reaching out to the team, it's for the team's products. All right. Our team as a team. But if it's with regard to me one-on-one, then you reach out to me. Yes, you can reach out to the team, but they'll direct you back to me. But like I always say, my team is fantastic. My guys are good. All right. My guys are good. So but if you insist it must be me, why not? Abba, it's okay. I'm okay by that. Once you are willing to pay for my time, I'm available for that. So what are the concepts I want to be sure I'm not talking to myself. I told you that there are things you look out for. The first being box pattern, which is your shoulder, your sweep, your break of structure to the downside that forms a fair value gap, the inducement, and a return to that fair value gap to grab it. Either that fair value gap of 50%. Then I introduced the concept of fair value IFVGs, inverted fair value gaps, where if the price has left you with box pattern, just look out for those inverted fair value gaps. Then I now said we have our flip zone, where previous support becomes resistance. Previous support becomes resistance. And this is in order of their reliability as I've seen them, right? And then lastly, I said we have diagonal liquidity into a fair value gap, trend line liquidity, slanting liquidity that terminates in a fair value gap. And then, of course, we now have, yes, our failed box pattern, where the shoulder gets broken with an IFVG. So how many of these concepts can we see here? Can we see previous resistance that became support? That's a flip zone. Zoom in. Can we see previous resistance that became support? Yes, there's a resistance there right at the green fair value gap. There's a resistance there. Exactly. And the resistance became support. There's even a resistance at the other block of that green fair value gap. The other block of that green fair value gap. Exactly. There's not resistance. There's a support. Support. Because we are looking for a support that got broken and became a resistance. There's a support. No, not the resistance, not this. The support below it. Even all the eggs. No, you can take it back up. Take it back up. The candle before the fair value gap. That green candle before the fair value gap. Exactly. All the way down. So you can see that whole region is a flip zone. How is it a flip zone? Support was broken or breaker block and it became resistance. It became a resistance. Pull it down a bit, please. Pull it down a bit. That green line, pull it down a bit. The high of exactly somewhere there. So somewhere around there, a previous support was broken and became a resistance. So that's a flip zone. What else can we see? Can we see diagonal liquidity? Do we see trend line liquidity that terminated in a fair value gap? Yes, that's it very clearly. Thank you. Sweet. Clear trend line liquidity that terminated into a fair value gap. So all these concepts are there. What this is telling me is if price gets back to that whole region, it's very likely that it will tap into it and then come all the way back down. So this one is a sure sell when price gets back to that whole region. Where will I be looking at specifically? I will be looking at that IFVG, the deeper green line. I'll be looking at 50% of that. 50% of that. But of course, we know that it can climb all the way to the top, right? So that's basically it. Now, if this thing we have drawn here, if this whole thing we have drawn here, right, which is the shoulder, the sweep, the break of structure to the downside, if it gets cleared, if price closes above it, especially those triple bottoms. That 1, 2, 3, 4, those wicks below, the wicks that were taken out by that red fair value gap, all those wicks that were taken out, the wicks above the IFVG. Yes, you can see there's a double bottom there, another double bottom. If that thing gets taken out and price closes above it significantly, that's a box pattern failure. It's going to the top. You just compare it with yen basket and gold, and that means price is busting through USD JPY. Where is it going to? Let's say our weekly time frame. In fact, there's nothing. It's on a price discovery. Let's say our monthly. It's on a price discovery to infinity and beyond. We need to see a chart of, I mean, I don't know if price has ever been there. I don't think so. I really don't think so. So you get what I'm trying to say? Yeah. So this is this now. So now this thing I showed you on the daily, where we looked for box pattern, the shoulder, the sweep, the break of structure, where we also looked for IFVG. We are now going to look for this exact thing on a lower time frame. Let's see it on the 4-hour. Let's see it on the 4-hour. Okay, what am I seeing on the 4 hours? Okay, zoom in. I'm sorry, slide. You can see there's a shoulder inside that diagonal trend line. Let's look at the liquidity concepts inside that diagonal trend line. Okay, see a shoulder. Zoom into that diagonal trend line. Everything happening in that diagonal trend line. Exactly. All right. So what do we see there? Is there a shoulder? Yes. There's a shoulder there. The shoulder that was formed there. Yes, that's a shoulder. Then price broke, came back to that shoulder, tapped into the fair value gap, grabbed the liquidity inducement. So let me do it one by one, sorry. Show me the show. So can I delete this, guys? Can I delete this one and show you, draw a new fresh set of schematics? So let's delete what we are. Okay, no, don't delete it. Let's just zoom in and see if we can draw. It shouldn't confuse people. They should be able to tell the difference. Let's zoom in. All right. So based on this now, there is a shoulder. That's a shoulder there. Immediately after that fair value gap, a shoulder was formed. How do you know it's a shoulder? Because there was a sweep, a grab of liquidity. So that's our shoulder there. You can draw it and extend it. Then that's our sweep. That's our sweep with a break of structure to the downside. With a fair value gap and an inducement. That's the fair value gap there. That's the inducement. So price went back, tapped into the shoulder. What did it now do? Broke structure to the downside. Downside. Thank you. Then what are we seeing now? There's now another shoulder. Thank you. That's another shoulder with another sweep. How do we know it's a sweep? Because it took out the shoulder and then came back deeply, forming a very wide fair value gap. Very wide. So for that fair value gap now, we now look for 50% of that. Look for a flip zone. Thank you. That's the inducement. That's the flip zone. So we see price tapping into it. And then now it's breaking to the downside. Now, as it's breaking to the downside, what can we draw again? Two things now. Price has left us, so we're going to be looking for IFVGs. Let's zoom in and see if there are IFVGs. So what are we looking for? A sharp green candle to the upside with a fair value gap, and then a sharp red candle to the downside with another fair value gap. Where do we see that? So that's our green candle to the upside. Is there any fair value gap candle to the downside that closed below that low? Not really. Not really, not on this time frame. So it will
Yes.
probably be on the 1 hour time
Yes.
frame. So let's move to 1 hour. And see any sharp green candle to the upside.
Yes.
That's it, way up there. A sharp green candle to the upside with fair value gap. Then price closed below it. That's still far. That's almost how many pips away? How many pips away? So we still have to go to a lower time frame, 15 minutes or thereabout, to see. Okay, fantastic. So what can we see here? See the fair value gap to the upside. The green candle fair value gap to the upside today. That's it there, zoom in. Exactly, fair value gap to the upside. Is that correct? That's it there. And then fair value gap to the downside that closed below it. Fantastic. There's another fair value gap to the downside that closed below it. Exactly. So is that an IFVG? Yes. And immediately it closed. What happened? Boom. But me, I can't use just one. So can I find a pseudo box pattern? Is there any kind of box pattern? Is there a shoulder? Is there a sweep? Okay, there's no shoulder, there's no sweep. But there is a break of structure to the downside with a fair value gap to the left. So all of these things that happened into that fair value gap on the left. Look, do you see that fair value? Demola, do you see that fair value gap on the left? The red fair value gap on the left. Exactly. Fantastic. So is there a shoulder? Is there a sweep? Is there a break of structure? So that's the shoulder there. That's the sweep there. That's the break of structure to the downside, forming a fair value gap. That's price returning to that fair value gap, then giving us the IFVG, then collapsing to the downside. All right. Is there any other thing that we are missing? There's now a fair value gap that has been formed. Okay, so what will I be looking for now? Let's draw that fair value gap. Fantastic. And any inducement? Exactly. So where am I expecting price to go to? Let's do our 50% of this move so far. Not the current move from exactly from there to that low. Not the current low, the other low that has closed. Exactly. Because this one, we don't know how low it can go.
Yes.
So what are the things I'm seeing there? I'm seeing a shoulder. I'm seeing a sweep. I'm seeing a break of structure to the downside with fair value gap. And then I'm seeing a flip zone. Where is the previous support that was broken? That's it all the way at 156.28 levels. So any return of price to 156.34 or 156.43, that whole stretch, any return of price to that region now becomes an entry for me. It now becomes an entry for me. Any return of price to that place is a box pattern and it is an entry for me. Now, some can say, but price is coming down. Price is coming down. How do I enter? If you don't see IFVG being formed, don't enter. So the last and final thing you can do now is, okay, maybe let's go to the 5 minutes to see if there's any IFVG. to capitalize on this particular move. This is the 5 minute. There's no IFVG. There's no IFVG. So there is no move. The train has left you. The train has left you. The last IFVG we saw is what we have marked, and price has gone. Now someone can say, oh, can I check it on the 1 minute? Yes, but at this point in time, are you just desperate for a trade? Let's check it on the 1 minute. Let's check it on the 1 minute. Any momentum move to the upside? Zoom in, let's see. Okay, there was one small IFVG. Zoom in. I don't know if you can see it. Can you see the IFVG? Where is the IFVG? The last momentum move, that's it. A move to the upside. Zoom in so they can see it very well. A momentum candle to the upside. And then a momentum candle to the downside that closed below. So that's an IFVG. You could have entered immediately that candle closed. Immediately that candle closed. Okay, is there any other IFVG? Okay, there's one oh, at 156.10. Zoom in. Zoom in. Yes, there's an IOFED there. See, okay, no, it's not there's no fair value gap. Is there a fair value gap there? There's no fair value gap inside there.
Yeah.
No, there's no fair value gap inside there. Although there's a fair value gap to the right that closed below that low. So that could have been a good place to enter. But another thing is, if it's not very clear, if it's not obvious, it's dubious. But yes, there is some sort of thing there that would have given you that move to the downside that you will have caught it. All right. So box pattern. If you would now do your box pattern, you can just be marking all the green IFVGs, all the green fair value gaps, knowing that if price closes below those fair value gaps, it can signal a move to the downside and you can get your trades, intraday trades. So is there any question for me? Do we want to do this same analysis on maybe a Euro USD to see what trades are setting up on that one? Any question for me? Any question for me? I'm expecting some buys on Euro USD. I'm expecting some buys on Euro USD. So we can quickly look at that before we close. Euro USD. Yes, I want to do Euro USD. All right. So why am I expecting some buys on Euro USD? From a sentiment perspective, what did we see dollar index doing? Remember, we saw dollar index, that dollar index had found a high on that daily. So based on this, and then USD JPY has dropped significantly. So based on this, I'm not doing gold. I'm not doing gold. But whatever we say, we have analyzed USD JPY. We're now about to analyze Euro USD. So that should give you an idea of gold. So let's zoom in on this. Let's zoom in on this. What am I looking for? I'm looking for an upside down shoulder. An upside down shoulder that was taken out. A liquidity sweep. So can we see anything like that? Okay. Yes. Okay. So those are two lows there. Two lows there. Exactly. That could have acted as shoulders into that order block. Okay. So let's mark those places. I know an analysis has already been done, it seems. Okay. Okay. So all right. There's an order block there. So we can mark that one too. Okay, so if based on this, if this move to the downside is a sweep of liquidity, right? That means that's going to be the upside down shoulder, right? That's going to be, so let's see the upside down shoulder that you just marked now. Then the protected low. Okay, so that's the shoulder there. That's the shoulder there. That's the sweep. That's the break of structure to the upside. Then all this below is the inducement, the liquidity that should be swept. The whole of 10875 levels is just liquidity that should be swept. So exactly, all of this is liquidity that should be swept. So that liquidity has been swept now, and that liquidity that should be swept can also be our shoulders, and this is now our sweep that tapped into that other block. So if that is truly correct, and we are expecting price to go up, what am I going to do? Where is my red my red fair value gaps? Where are all my red fair value gaps? The closest fair value gap that is red. What am I expecting to see? A green fair value gap that closes. So look at that fair value gap right there, just before the sweep. Remember, we're thinking of buying. So where is the red fair value gap? The candle before the current candle. There's a gap there now.
Yes.
Remember we said box pattern, IFVG, flip zone. So there's a gap there. Thank you. So if you see a fair value gap, green candle with a fair value gap that closes above this with force. So let's move to 15 minutes. Let's move to 15 minutes. Okay, now we are seeing it much clearer. We now see that it's actually a bigger one all the way there. Thank you. So are you guys seeing what I'm seeing? So that's it there, right? So that would be the shoulder. The shoulder was somewhere around 12 p.m. This one now that broke to the downside will be the sweep. If you see an IFVG forming in the opposite direction with force, a green candle with force that breaks above and closes this fair value gap, then we know that that's a possibility of a buy. And where will it be targeting? It will be targeting, see that fair value gap on the top there. So remember we said as our target, we want to see diagonal liquidity into a fair value gap. So look at all that liquidity at the top. Those triple tops. Yes, that's a triple top there. And the triple top, just above the triple top, there's a fair value gap. Exactly. Just above the top, there's a fair value gap. Thank you. So if we see price close with force, so I can come to my 5 minutes now for clarity, for some level of clarity. 5 minutes. Okay. So I can see it much clearer. All the fair value gaps that are there. If you see price come with force and close and hold, in fact, above this, one can quickly take a sharp move to the upside, zoom in. You see that there's an IOFD exactly. Move to the downside. So if price closes with force above into that fair value gap and previous support now becomes resistance. So if price is holding around 1.0880, 1.0882, 1.0884 levels, and price is holding, and you see a sharp move of the XY to the downside, you can quickly do your 1:3, short stop loss of about 5 to 7 pips, and you target that round figure above into that liquidity zone above. All of that into that liquidity zone above. For an intraday quick move, 1:3. What is sponsoring this? Price tapped into an area of interest on the higher time frame. Now price has grabbed the liquidity below. All the fair value gaps that are being formed now, we want to see if they will be resisted and closed with a sharp move to the upside. If that happens, we take our quick buy, put your stop loss below. My stop loss will be around 1.087473 levels. Take profit to be around 1.0900. Once you can see your 1:3, do your risk management. Price will most likely tap into all that liquidity above before it starts coming down. Is this helpful for anyone, for Adi who asked for Euro USD? So this is what we are looking for. Look at everything as I wrap up and hand over to Demola. You want to see your box pattern telling you the narrative. You want to see your shoulder, your sweep, your break of structure to the downside with a fair value gap, your inducement. You want to see your IFVG, your IFVGs. You want to see your diagonal liquidity terminating in a fair value gap, right? Then you want to see your flip zone, where previous support gets flipped and becomes resistance if you are buying, or previous resistance gets flipped, previous support gets flipped and becomes resistance if you are selling. So this is the support. Price breaks through it and turns support into resistance so you can sell. If you are buying, you want to see resistance. Price breaks above it and turns resistance to support if you are buying, all right? Once you see all these concepts, you arrange them. You look at the time. Is this within the time where there is volumes between 7:30 and about 10:30? Then you now look at your sentiment. What are the correlated assets telling you? Then you now look at your risk to reward. You avoid plenty trades. If possible, you want to take one trade per day or per 2 days, so the risk to reward will be in your favor. And then you look out for news. Is there any news coming out that will destroy your sentiment for that day? Once you have those things lined up, you take your trade. If you don't have those things lined up, if it's not obvious, it's dubious, you leave the chart and you come another day. Try this every day, journal it, look out for these trades, and gradually you'll be making progress, gradually you'll be making profit. Once you make significant profit, withdraw your profits, all right? Over to you, Demola. Today was a long day, but you started it with your long analysis, and I took over with your long analysis. So over to you guys. Any question for me? If it's not clear, let me know. No question. Thank you, Demola. Over to you. Have a safe trading. Cheers. God bless. Please don't forget, those of you who are paying for our training in Abuja, tomorrow, our facilitators are coming all the way from Zaria to Abuja. I will also be there on the last day to take the last session briefly and to answer all your questions. Also, don't forget, we're still selling our bots and we're still doing affiliate commissions, our website. Please don't forget, you can send links to people and you will see once they pay, you get your commissions paid to you. Any expectations on how elections will affect the market? Typically, we can see what happened in the last election. Usually, once the US election has a clear-cut outcome, the stocks rally, generally. They rally because indecision, now we have a clear president, okay, is going to go up. So that's basically it. In the long term, I don't know, Kamala coming on the team is someone that, I don't know, my brother. If it's Trump, I know there'll be an end to all the wars. The wars will end. Trump doesn't like war. Trump likes business. Why are we fighting? Let's make money. But the other guys like fight because that's where they make their defense contract, weapon of mass destruction. Let me not talk too much. I also hope to be given visa one day to go to the US and record telecast. All right. So we will talk off key. All right. Thank you very much. God bless.
All right, sir. Thank you so much, sir. That was a very powerful analysis this morning. Thank you to everybody that came and joined. We'll be reconvening by 3 o'clock for the New York session market color. I also, like our boss has mentioned, ensure you register. It ends by 12 p.m. today. Ensure you register for the class. We have about two or one slots. I think one more slot remaining for those that want to join physical, right? Online, you can join. For physical training, I think it's about 1 or 2 slots. So you can just do well to book that slot now, and then you join us tomorrow. All right, until 3 o'clock, ensure you trade with proper risk management. I wish you all profitable trading. Cheers and God bless.